All right. Good afternoon, everyone. Welcome to our webinar here on updates related to property tax assessments of affordable housing. For those who may not know me, my name is Isabel McLean. I'm the Director of Policy and Advocacy at the Virginia Housing Alliance. I know we work with many of the folks on this call who are planning to come to this call, but for those who maybe don't know Virginia Housing Alliance, we are a statewide nonprofit that advocating at both the state and federal levels to increase access to affordable housing and end and prevent homelessness across the Commonwealth. While we do a lot of advocacy work, we also do quite a bit just to support the affordable housing community across Virginia in general, whether that's through training or capacity building, et cetera. And so this webinar today is a little bit of all of the above of all the work that we do. We wanted to bring together our partners within the affordable housing space in Virginia to talk through some updates that and some changes to policy regarding property tax assessments that we'd advocated for a few years now, and want to make sure that the impact of that legislation, that advocacy work, is understood and implemented correctly. So that's the purpose for this webinar today. We are specifically going to be speaking about a bill, House Bill 2245, that passed during the 2025 General Assembly, which clarified the manner in which tax assessors are required to value affordable housing and how affordable housing providers can submit and share the relevant information to assessors to ensure greater accuracy in that valuation. It's really important that the affordable housing community in Virginia understand these changes and what this can mean for them, what sort of rights this accords you all, and how you all can respond to ensure you have the most accurate tax assessments possible. We're hosting this webinar now because the actual effect of this bill is starting January 1st of 2026. It had a delayed enactment clause due to giving a stakeholder group some time to develop some aspects of this that I will touch on later. But this will go into effect January 1st, and so we want you all to have this information now. So you can prepare for the next assessment season for any of your properties. You will probably notice when you jump on, it should have given you the warning that this is recorded. So we are recording this webinar today and going to be sharing that with everyone who registers. You are welcome to share this and the slides. We'll also send those out with coworkers or other folks that you work with. This is very much tailored for the affordable housing practitioners. So I do ask that you keep that in mind with who you share with, but this is information that we want to be widely available for affordable housing practitioners. And this is a resource for you all. I guess the last thing I'll say really quickly, and then I'll go kind of over our general agenda for today, is that I will be talking about kind of what we advocated for, what HB 2245 means for you all, how to respond to that, etc. But I want to make it really clear that I'm not in a position to provide legal advice. So do not construe anything I'm saying today as legal advice. Still always encourage everyone to work with lawyers for any sort of questions and to get into kind of specific application to each of your properties and your own situations. But in general, this is us kind of explaining our understanding of this bill, our understanding of the existing code, and the various resources that you will have to comply. So for today, I will first kind of go into the problem, kind of what was the issue that we were trying to address with this bill. And again, I know some of you on this call have been involved in this advocacy for a while. This is not new. Or I also assume that for most of you, this problem is not new, that this was the experience of many affordable housing providers and the reason why we were advocating so hard for a solution. So I will go into that just to make sure we're all on the same page, even if for many of you, you're very well aware and understand and have been impacted by the problem. Then I'll go into depth about the bill, what it does when it was passed and what that means. As part of the bill, It tasked the Department of Taxation to pull together a stakeholder group to design a consistent, uniform form that affordable housing providers can use to report their income and expense data to better inform, in the income approach valuation process to ensure greater accuracy. I was a part of that stakeholder group, and it took a long time to get that form finalized, but we did. And so that's a real important piece of the implementation of this bill that I will go over. So you will understand how you can use that form and what that all means. I will try to get through all of this information and ensure we have time at the end for questions. Because I'm sharing my screen, I might not always see questions as they come up in the chat, but I still encourage you to put them there. When I get a chance, I can read them and answer them. We will also have time at the end to kind of open up the floor to other questions about it. And then lastly, if we have time, I do want to share a little bit about kind of next steps and what we're going to be advocating for moving forward in this next upcoming General Assembly that's still related to property taxes of affordable housing, just so you can see kind of where this fits into a bigger picture of advocacy around this topic and trying to reduce the burden and preserve and support affordable housing. So without further ado, I'm going to keep on going because there's quite a bit of information here. So again, this problem is probably familiar to most of you, but just so that we're all on the same page, I kind of want to explain where we were coming from and what the issue was. So for many years, working as Virginia Housing Alliance, representing affordable housing providers across the state, and working very closely with you all, advocating on your behalf, we heard for many years about issues with inconsistency and inaccuracy across the state when it came to property tax assessments of affordable housing. That not only were they done really inconsistently and different based on where you are and who the assessor was, but that oftentimes affordable housing was not treated separately, but was assessed just as market rate properties are. Or if it was treated still separately, it was still assessed in a way that wasn't the most accurate. That wasn't fully accounting for the fact that these properties have more limited income due to the fact that there are rent restrictions that limit how much income they can receive, and that those rent restrictions are very much tied to the property itself, and so those very much impact the value. So we worked with many of you all on this call. I do want to just give, just a general shout out. We could not have done this advocacy without you all. This is very much in partnership with many affordable housing practitioners and many of you to really dig deep into this problem and find a solution. So here on this slide, we have some quotes from many of you who shared how this impacts you all and how serious these inaccurate assessments were. And just in general, the burden of always having to appeal assessments and fight hard to try to get something that reflects more the value of affordable housing, to educate assessors about what this means, etc. There were several different pieces of this. We recognize that not all assessors were doing this wrong. We talked to some folks who did have accurate assessments, but the general issue is that this is not done consistently across the state. Some it was more a matter of the assessor didn't even know the property was an affordable housing property or didn't know what was required or best practices to assess it. It could have been just kind of general ignorance, not knowing that. Or on to the side of, some assessors willfully choosing not to assess these properties correctly for a variety of reasons as well. So I want to make it clear that we're not demonizing all tax assessors here. I know that was not our intent here, and I want to make sure that's clear here. But just recognizing that this was an issue and a lack of consistency across the state, and we wanted to be able to find some sort of solution to ensure that this was an unnecessary burden on affordable housing providers that resulted in them paying more than their fair share of taxes in some situations. So we Oh yeah, sorry. Let me go into a little bit more depth. It's also helpful to explain kind of what was in our code, what was dictating this process before we passed a bill to address this. This is important to kind of understand in general what those changes are and how they changed kind of the status quo before this bill. So here is some of the language. I didn't include all of it because that would take up more than one slide, but this was the code section that applied to property tax assessments of affordable housing. And even though you can clearly see here, I won't go and read every word here, but it was clear that the intent was that that assessors consider and incorporate the income and expense information for such properties and use what's called the income approach to assess affordable properties, affordable housing. And then it goes into detail about certain things that should be considered. For example, the contact rent and the impact of applicable rent restrictions, actual operating expenditures and expenses, etc. There's more information in there. However, this sounds like this is what we wanted, that, this is the way to accurately assess affordable housing. And I will say this aligns with, best practices too for professional standards, according to tax assessors too, is the general recommendation to use the income approach. However, the way that this was worded, and the way that kind of it was piecemeal together over time as some language was changed and added here, it still left quite a big loophole that in practice, assessors saw this as an option. With the way it says shall consider, that still means that there is discretion left open for an assessor to decide if the income approach actually is the best method forward, and leave it for them to their professional discretion. So because of that, this left this hole where it was really unclear if the income approach actually was required, if it was kind of optional, and ensuring that there's a clear standard for what is required was really clear. Because again, this doesn't necessarily address every issue, just that general ignorance that maybe some tax assessors don't know when a property is affordable, etc. That's a different thing that, I'll go into later about how with the implementation of this bill, we're also trying to address that too. But it became really clear to us that we needed to change this code to make it really clear what is the actual standard, what is open for discretion, what's not, and what does this really mean in practice. I will point out here that subsection E that I put on here was added later to the code. And if you see, it's an attempt to, again, take away the shall consider and say affordable housing shall be assessed using the income approach. But at the very end here, it says, according to the requirements of subsection B and other provisions of the section. And so it referred back to subsection 1, which still left this confusion of, is it then still an option according to subsection A here? So anyway, you don't need all of those details, but just to clarify that this code section was kind of piecemeal together and it was confusing. And while there was a lot of information about why it's good to use the income approach, it wasn't clear if that was required. Now, I assume most of the folks on this call are familiar with what I'm referring to when I say the income approach, but I did want to just take a step back. Again, I don't want to assume anything and want to make sure we're all on the same page. But when I refer to that, that is a method of valuation of a property that is based on the income potential of that property, as opposed to, a sales comparison approach. It said just going off of, sales and what this property would be sold for, or comparing that to other kind of market rate properties, but it's very much based on its income potential. And because specifically the income of affordable housing is different and restricted, this is the most appropriate approach to use. It's really the only way to actually assess this type of property correctly. And I want to make it clear that we are not advocating for any sort of tax abatement or exemption or any sort of like benefit or extra consideration. This is just based on the fact that the income approach is the only accurate way to assess affordable housing, because it recognizes the fact that affordable housing has limited income, and that absolutely impacts the value of that property. And so this is the best way, the most accurate way. So we weren't advocating for any sort of abatement or benefit, but just advocating for accuracy. So this is what I mean by market approach. There's this specific kind of calculation or equation for it. We don't have to get into all of those details, but this will come up a little bit later as we talk through the form. Alrighty, so now that we understand we're all on the same page about what we were trying to address, trying to bring more consistency to how affordable housing is assessed across the state, we worked for a couple years now on legislation for this code section to address that sort of confusion and lack of clarity. We had a bill in 2024, but I'm going to be talking more about the bill that actually passed in the 2025 General Assembly, which is HB 2245. It was introduced by Delegate Katrina Carlson, who represents areas of Charlottesville and Albemarle County. And I will say she was an incredible delegate, and I would be wrong to talk about this bill without giving her a shout out as just being an amazing patron. She fought really hard for this bill. And we would not have gotten this across the finish line without her dedication to this. She, is very passionate about affordable housing and dove into this kind of complicated issue. I will say property tax assessments are not the sexiest or most exciting topic, but she recognized how much impact this had and how important it is. And especially because this bill was not without controversy, we did work a lot with VACO, VML, and the Commissioners of Revenue and different tax assessors to try to find a solution for this. And with Delegate Carlson, we were able to get to a place of compromise and find a bill that VACO and VML no longer opposed and that was able to get passed. So this was a difficult process. There was a lot of work and complication here. But we were able to get this bill passed with Delegate Carlson. Here I have a QR code if you want to scan it to see the bill and follow along. I will say I have copied and pasted some of the language into our slides, so you don't have to follow along that way. But I do want to make sure you all have access to this if you want more detailed information and want to read it thoroughly yourself. Again, I'll send these slides out so you can see this link later as well. Alrighty, so in general, what HB 2245 does just across the board is that it clarifies a lot of the language in here to make it very certain that assessors have to, it's not a discretionary choice, but they have to only use the income approach, they have to use income approach when valuing affordable housing that is generating income. And a lot of our changes here are specifically to subsection E, which is what I referred to earlier. That was, kind of the last attempt to do this, but it still left an open loophole by referring back to subsection A that seemed to leave it as an option. So a lot of our strategy here was saying, hey, what we're doing is just clarifying what has been intended in previous years, which is to make it really clear that this is not an option, and also clarifying that this does apply specifically for affordable housing that is producing income, because that is the basis of why you use the income approach. So clarifying that and removing any sort of referral back to subsection A for saying that you had to follow that too, clarifies that this does not have that loophole. It only just says if the property is not generating income currently, then you can use subsection A and the rest of the code, kind of follow what was already existing, which very much made it clear that the income approach is preferred, what to use to do that, etc., but still leaves a little bit of that kind of question of discretion. But we have removed that discretion specifically here with subsection E. I will say that one of the things that we had to concede as part of getting compromise with the Commissioners of Revenue and VACO and VML was recognizing that a lot of the reason why assessors may not have done the income approach is because they had a hard time getting the accurate data from a affordable housing owner to do the income approach correctly. Now, there's a lot of things that they could do to go around it. There's ways to get information based on, relevant commercial or government databases. And, there's language in here kind of recognizing it, that there is a way to get some data, but kind of to bring them to the table and recognize that in order to do the income approach well and as accurate as we would like, it does require accurate income and expense data submitted by the affordable housing owners. Now I'm going to get into a little bit more of this detail because that's really important for later, and I'm going to explain all of what that means. But just know here that that is what is qualified here in subsection E. The last thing I'll add is just a reminder again that this was a delayed enactment for January 1st. So even though we passed this in this 2025 General Assembly, there was a little bit of a delayment period to get into some of the other resources that I'm going to talk to briefly. But that is the general impact of HB 2245. It removes this question and makes it really clear that the income approach is required. But it has a little bit further information to clarify what's needed to do that well. Before I jump into exactly how this ties into HB 2245, I do want to take another quick step back and refer to another section of code that's right next to this one that has been there for a while. It's section 3294, and it basically says that for a long time, ever since this was passed, that assessors may require the owners of income-producing real estate to furnish property statements of income and expenses, specifically attributable over a specified period of time to each such parcel of real estate. So assessors were already given the ability to require that they get this data, but the main enforcement of it is saying that if an owner appealed the assessment, any failure to provide that data would mean that that data could not be introduced as evidence in an appeal. And so in practice, for many of you, again, you may have experienced this and are very familiar, but in practice, sometimes this meant not providing that data initially for the assessment, but once you got the assessment, providing the data and appealing. So then it could be considered in that appeal once you've provided that data. I understand that that was in many ways kind of normal practice for affordable housing providers. And I will say that was kind of understandably a concern and a frustration of tax assessors of saying, you're pointing out that we're not getting this right the first time, but it's also hard to get it right the first time when we don't have access to this data until we get to an appeal, etc. And we wanted to make it really clear, assessors, you do already have this mechanism to require it. And we wanted to also make sure that we don't add to what they're able to require for the data to not increase the burden on affordable housing providers, but also recognize that in order to get accuracy, they need that information. So how does that section then relate to HB 2245? So because what this bill said is that the income approach is required if the owner provides the data according to that code section 3294 that I just mentioned. It is really important for you to understand what that means. And even though you can still, even if you don't provide the data, it still is, the same kind of code section that we've had for many, many years, where you could still argue that the income approach is the most accurate. You could go to appeal, continue as you have been, in the past, which sometimes works out, sometimes doesn't. If you provide your income and expense data up front, then you can afford yourself the full impact of this bill. If that's done, then that is absolutely not an option, and assessors have to use the income approach. Now, what do we mean by providing the statements of income and expense data, and how can we ensure that you all doing this is not an additional burden? Like I said earlier, we didn't want to expand what could be required or make this harder. So a piece of this bill was directing the Department of Taxation to develop a uniform income and expense reporting form that could be provided by assessors to affordable housing providers that can be completed by you all prior to the assessment. So if we're saying that in order to ensure you get an income approach, you have to provide this data, one of the big feedback that we got from many of you all is, well, this could be really different based on where you are. And it could be really difficult to do if one assessor has a whole different process than the other, and there's not really a consistent way to do this. It would be a lot easier if we did get all on the same page about what is actually meant by statements of expense and income data. And to ensure that there's a clear way where, affordable housing providers can say, hey, I completed this report. This is certification to show that I did provide this data. I provided the base that was necessary. And so, yes, I have to have the income approach for my property. We wanted that to be really clear and not just be up to if an assessor felt like the data was enough or not, but made this really clear that there is a pathway forward where correct and full completion of this form is a way to ensure that you have complied with the data requirements, and thus then your property must be assessed with the income approach. I do want to make it clear here that there is a little bit of flexibility. So you can still provide data in other ways. An assessor could still say, hey, could you just send me your rent rolls or any sort of financial statements? And you could send it that way if you wanted to. You still could kind of go about this in any way that maybe you have already, if you have a process for this now. That it could still be just kind of considered up in the air for if the assessor would say, yes, they provided me this data or not. That could be a way where you could argue and you could prove an appeal, yes, you provided sufficient data. However, because we have created this reporting form and we've said that correct and complete, completion of this is for sure compliance with that code section, this is the best way to ensure that you have complied. Leaving it up kind of in the air could, there could be other kind of discretions or issues that come up with whether that was adequate data, et cetera, et cetera. It could be, more burdensome to kind of do it in different ways based on the assessor and where you are and what those general practices are. But as long as you fill out this form in completion and correctly, that is the way to ensure that you have complied. So I hope that makes it clear here that there's still room for other ways to submit this. There's still room for that and other ways to prove that you have complied and shared data. But there is at least one way that for sure that you can do that. And that should be accepted by assessors across the whole state. They have to accept complete and accurate completion of this form as compliance with that data requirement. Now, I'm going to go into that form in a lot more detail in just a moment, but before I do want to pull out two other details that were included in HB 2245 that are just important to note and to keep in the back of your mind. The first is, what do we mean by affordable rental housing, and what type of properties does this apply to? And I probably should have said that in the beginning just to clarify, because I know we've gotten lots of questions about, what exactly where this applies, etc. But I just want to be clear that this is a code section applying to multifamily affordable rental housing that has specific rent restrictions tied to the property. This does not apply to single family homes or community land trusts or other kind of types of affordable housing or other issues. There are other code sections that relate to property tax assessments and tax abatements and kind of different things in other areas. This is very specific to multifamily affordable housing. And I will say that our bill does include some changes to how affordable rental housing is defined. This was not something that we really wanted to do ourselves, although it became clear that some of the legislators in the General Assembly wanted greater clarity and more specification for what we meant by affordable housing to ensure that this is housing that is compliant with the major programs that support affordable housing and that have rent restrictions tied to the property. So I do just want to highlight here that we've referred to specific federal programs. This includes the vast majority, if not all, of kind of the funding sources for affordable housing, like the Low-Income Housing Tax Credit Program, project-based rental assistance, et cetera, et cetera. I can go into more depth about what each of these references are and which each programs apply, but in general, this is established programs that require rent restrictions baked into the property itself, to the records of the property. There's a covenant, there's an enforceable it's enforceable by a government entity. The legislators did want to remove kind of vague language at the end that referred to state and local laws or state and local programs because they felt like that could leave the door open for a lack of clarity for what type of properties apply Again, that was not ideal because we wanted this to really be a broader definition that just tied to the fact that there are rent restrictions. But I do want to clarify if your property does not have any sort of federal program participation at all and is only something related to a local ordinance um, or um, or doesn't have a rent restriction covenant tied to your property, then this would not apply to you. So, so important to bring that up. I won't go into all the detail, but if there are questions later, I can, and just specifically what those programs are. Um, Other details is that in addition to asking the Department of Taxation to convene a stakeholder group to make the reporting form, it also tasked them with creating and implementing a training for assessing officials and contract assessors on the assessment of affordable rental housing. This is important because, again, like I said earlier, not all of the inconsistency and inaccuracy was done because of loopholes in the current code, but sometimes it was done simply because assessors were not aware of what was required or were not aware that a property was affordable. And so this is a big piece, especially for contracted assessors who don't have as much of a clear training or licensing process for in Virginia. So this training would be pretty comprehensive and available for anyone who's doing assessments so that they are really clear on what's required, what the income approach is, et cetera, and the impact of this bill. So just in the same way that I'm doing this training for you all so you know the impact of it, there is a training and development that will be added for the training for assessors themselves. I think that they've definitely started working on this, and we're involved in that process. And I will be given an opportunity to kind of add feedback and edit it and contribute to it, but it's not completed yet. So hopefully we will see that soon. But I did want to let you know. Another kind of piece of this and a piece of the form itself is that, well, yes, we're trying to have this training to also educate assessors. For some assessors, they simply just didn't know that the property was affordable. And so by you responding to the assessment and providing this affordable housing form, you're telling them, hey, my property is affordable housing. And going ahead and highlighting for them in the very beginning that there's a separate process and that this is why you filled out this form and given them the income and expense data. So it's one way to also kind of communicate as early as possible in the process that your property is affordable to try to avoid too that the situations where an assessor doesn't even know that that's the case. Alrighty, so moving on to kind of a deep dive into this form that I have mentioned now a couple times. So there's a link here. You can scan this QR code to access it, to follow along. And just a little bit after I kind of go over some general things about it, I will switch from this PowerPoint to the actual form itself and just kind of walk you through it briefly. I don't want to take all the time in the world to like read every single aspect of it, but I want to make sure you all understand it more generally and understand how to fill it out. And be that sort of support for you all so that this can be the useful tool it's intended to be. As I said earlier, VHA was a part of that stakeholder group to develop this form, and I know many of you on this call I reached out to get input on this form and to run it by you and to talk to you all as I could. At least I know for some of you on this call, this is not the first time you've heard about this, but the final form is available and published online now. And can be used, moving forward, and will have the power intended by this bill after January 1st when it goes into effect. So this is in general what it looks like. It's available on the Department of Taxation website. Now, before I kind of switch over, I want to just generally go over the purposes of this form and the general instructions for it. So there's a couple of different sections, and there's many questions that try to outline, cover every single, possible type of information that may be necessary to provide as part of your income and expenses. But we worked really hard. A lot of my purpose in being a part of the stakeholder group was to ensure that it wasn't adding to the burden of what you all should provide for this data, and that it was really sticking to the absolute the kind of like what was the absolute bottom line necessary to ensure that the income approach was done accurately. The form itself is available online and is PDF fillable. I encourage you to do it that way. You can print it out and do it by hand, but there is instructions on there, encouraging if you do that, that it must be legible. Kind of common sense stuff there. But it's especially, I encourage you to do it online because you can save it and there's parts of it, there's some aspects of the form that have asked for information that won't really change year to year. And so you can kind of duplicate that form the next year around, leave some of the information in that's still true, and then just go back and update the more recent information as you need. So I recognize there are parts of this form that maybe will be more burdensome the first time you do it because it's asking general information about the property across the board, but that information won't change every year. And so you don't have to refill that out every year. You can just kind of go back to the same form you had before. Now, another important piece of this kind of general instructions, and I will say that this form has a very detailed instruction page or two at the very end that's supposed to kind of address any sort of questions and should be enough to kind of help you go through and understand what each question's asking for. But in general, I want to make sure you all understand that some of the instructions say, attach additional or separate sheets or, attach additional information if necessary, etc. Because some of the boxes are small, that may be necessary. But again, I want to make sure if you do attach separate sheets, for example, if you've been asked to answer something and it just won't fit in that little box, but you could just attach another document that would just list it all out, you can do that. They do ask that it's at least a minimum of 11-point font, so it's legible. Apparently that's been a problem for some assessors in the past, so they wanted to include that in there. And that you clearly indicate where that attached form is trying to answer, what question it's answering. So that's, again, I want to make it clear that you can do that if the boxes are small, but it's not required. It's just based on your accurate answering of that question. If you deem it's necessary, you can attach another separate sheet. There's also information there that says that if you have detailed financial statements or rent rolls, you can attach them and put in the box "See attached document" instead of filling it out specifically in the form. We wanted information in there to say that explicitly in case that's the easier option for you, but this started to kind of open the door with a little bit of disagreement and conflict for ensuring that didn't mean that that what you were providing wasn't enough to still be considered complying. So it is really important that if you do attach another form instead of filling out and copying and pasting that information in the form for a specific question, that you make it really clear that it's legible. You're clear about what parts of the form that this document is answering, and that you have at least the data that is requested in the form. So for example, if you're attaching a rent roll and you don't have information about, say, your vacancy rate or exactly what the different rent is for each one, or I don't know. I'm just trying to think there. I'll go into that in just a little bit when we actually look at the form, so you'll see what's requested. But if you attach something that doesn't have all that information, that can be a problem. Whatever you attach does have to have at least what is requested in the form in order to be considered completing the form. But again, there's a little bit of flexibility there. If you have a spreadsheet that you're like, this has all of the information they're asking, do I really have to copy and paste this into each box? You don't necessarily have to, as long as you ensure that does have that information. The last thing I'll say is at the very end of the instructions, they've kind of written out a list of common documents that may assist you in completing the form. And the assessors wanted to include this here so that they can clearly show you all what documents to reference, and because they wanted to require that you attach those. I worked really hard to ensure that you do not have to duplicate your information, that it's not required that you also attach other pieces of documents. This is optional. It's just here as a way to kind of direct you to where you may find these answers and what could be helpful to assessors, but you only have to submit this form completed. You don't have to attach anything. That is optional. And again, if you need more space, that's up to you too. But but that is really clear here. So I just wanted to make that clear because it's a little bit confusing, and that was something that came up a lot in the negotiation of creating this form, was ensuring that we didn't expand beyond what was required, but still left room for some flexibility. And then I will say again, in the detailed instruction section, it goes by each question and puts a little bit of instructions for what they're asking. If you have any questions about what that specifically is asking for you, refer to the instructions. And then I will say there are a few boxes that say this will be leave for the assessor to put in information. You do not have to do any sort of calculations or add up any numbers or anything. You're just providing the numbers that they need, and it's the assessor's job to add things up, compute, come up with kind of based on their formula for how they determine things. That's their job. And so I wanted to also include that here as part of the instructions, that you just provide your data. You are not asked to do math, because that just ends, that could be another kind of area where maybe mistakes could be made, and that is not on you all, that is on the assessor. Alrighty, before I switch over to the form, and I do want to go through it briefly, I'm not going to take the rest of the whole time on it, but I do want to just highlight here that recognizing that it was not always normal practice for every affordable housing practitioner across the state to provide income and expense data. I understand that. And I know some, said, well, our lawyer has suggested that we don't do it at this point. And again, I'm not a lawyer. I'm not giving you legal advice. You have to make the decisions for what works best for you based on what is here. But I will highlight that there are, especially now after this bill, a lot of reasons to submit this data as early in the process as possible. This is the best way to ensure that you have as accurate of assessments as possible, because the bill language does explicitly say that if you've provided this data, the income approach is not optional. So this is the best way to ensure that you get the income approach at the beginning. You don't even have to go to the appeal process, etc. I'll also highlight another concern for some folks about why they didn't provide data in the past is that, how do we know that this will be confidential? Explicitly on the form and also in state code is that whatever data you do provide is confidential, and there's specific law holding assessors to that. There's also important to note that this is exempt from FOIA, so whatever you provide is absolutely confidential. It can't be FOIA'd, it can't be made available to the public. There's very strict laws about that. Other things to consider here is that, some folks would just, provide the data for an appeal anyway. So this is a way to do it sooner and hopefully remove the even need for an appeal. And just in general, there are many assessors who do want to value your property as accurately as possible, absolutely, who are doing their job well. And the easiest way for them to do that is to have access to the data they need, and it helps them be more accurate. And now you have a surefire, consistent way to do that with this form. Alrighty, so I'm going to quickly switch over to the form briefly, and then we will open the floor to questions, and if we have time, kind of talk about the other things that we're advocating for. Give me 1 second. Okay. Alrighty, so you should be seeing now in front of you this form. It is called Form ARH, Affordable Rental Housing Uniform Income and Expenses Form. Again, the link is provided in the slide in the QR code for where to access this publicly, but this is what it looks like. Again, here in the instructions, it references again that this is confidential. All the other instructions that I was referring to are down here, where there's a whole page about confidentiality, how to complete it with information about what it means to attach documents to this, etc. Goes into detailed information about each question here. If you're not sure exactly what each of the questions are asking, you can look for more detail here. It kind of lays out everything that's being asked for. And then here's a section I mentioned too that just says common documents that may assist you in it. Again, I just want to reiterate, you do not have to share any of these documents. It's just mentioned here so that you know where to look for some of this information. I assume most of you do already know this, but I want to make it clear that this is not asking you to submit any of these things. That is not required. This form is asking for the important information that would be available in these documents, and if you provide that here in this form, that is enough. So again, this is a couple of pages, and I don't want to go and bore you all for each question that may seem a bit self-explanatory. But just broadly, this top section has just information about the property, the owner itself, if there's, best ways to contact you. I will say that a lot of assessors said it's really helpful to have the contact information for the owner. So if they have any clarifying questions, they can follow up, make sure they understand something, etc. So I do encourage that here to provide that. And again, at the last section, there's a place where you're supposed to sign and certify that this is done, according to your knowledge is true, correct, and complete. And that's a place where you can also put your contact information for who filled this out so they can do that follow-up. But this is just general information about the property. The assessment year and the assessment year, kind of depends on the process for the locality. You might not necessarily know that or exactly what they're asking for, but you can at least put here for the data that you're reporting, what is the date range for it? Just to rarely clarify, for the data you're providing, when does that start, when does that end? To communicate, so if there's any sort of confusion about start dates, end dates, that you've at least done your job to communicate what your data is relevant for. Part 1 here is the general property information that I mentioned earlier doesn't really change year to year. And so the first time you fill this out, you'll be answering these questions, but moving forward, you might not have to really change these. There are, questions about, total number of units, age of the building, etc., what sort of amenities you have. All of this stuff helps paint the picture of what this, what your expenses are, what your income is. It does ask that you explicitly say that this is affordable housing, and what type of affordable housing program you're part of. Here, that's, again, why would you be filling this out if this wasn't affordable housing? But that is a piece of this to certify that you believe that you do qualify for this, etc. Again, here they're asking for affordability restrictions and legal and contractual restrictions. You do not have to attach specifically what those restrictions are, but I also recognize that this box is a little bit small. So for some, it may be as easy as saying, well, our units are restricted to 60%. They have to be affordable to folks making 60% AMI. But if that is kind of like different there's some units where it's different, etc. There's maybe different types of kind of rent limits or things like that. You may want to attach another sheet to go into that detail, and same with the legal and contractual restrictions. However, in part 2, this is the section where you go into detail about your income, and that would be kind of asking for what would go in rent rolls. If it's easier to just go by, okay, so 10 units are set aside for people making 30% AMI or something, and the rest, 30 are for 60% AMI. You can go into that detail. That's what's supposed to be here as well. So I just tie that together here so that if, as long as you're answering the question at least once on this form, that's good. If you don't have to, repeat all of the detailed and differentiations here, other than just saying in general that there are rent restrictions based on income, this is where you go into those details. For those who gave me feedback on this form, we really wanted this section to kind of follow the general equation for what's required to calculate gross income, which recognizes market value, what you could be asking for a unit. What is the rent restriction for that unit? Kind of what are the lease losses because of this rent restriction? What are lease losses or collection loss due to like vacancy, etc., things like that too. So recognizing market value minus collection loss and lease loss, etc., plus any sort of additional income produced by this property too, for things like parking, etc. I don't know. And then that is after all of those things are collected, then the gross income can be calculated. Again, here for these, you do not have to add up the math and put that here. This is just here so the official can put that in here and have it all in one form. But you do not have to do the math because that opens a potential area for errors. But that's what's being asked here. Again, if it would be easier for you to just attach your rent rolls that has at least all of this information, that should be enough, but make sure that it does have at least all this information. And then part three, this is where you can go into detail, and we've tried to think of every single possible type of expense that may be included here that you can add. And again, if you need extra room, or if there's something that you've chosen an other option, you can provide an attached list. But that's where this is here. And then lastly, this is where you sign and certify that it's complete as much to your knowledge. The only other thing I will say on here is just a general kind of misconception that has come up that when you provide the rent data, you are not just providing what the tenant pays. Because, for example, some of your tenants may also get housing choice vouchers or something, and so that's covered, by they don't actually have to pay that section. And so whatever, 30% of their income that they're actually paying, that tenant portion, that you actually need to report the entire rent, including what is covered by the voucher. That is something that has come up as a question or confusion here. And I do just want to clarify that that's what they're asking for here. And that is what is meted by the restricted rent, that that's the accurate information that they're getting from you, because that's the full amount of the income that you're making on that property, even if it's not all that the tenant is paying. That was just something that came up that was a little bit of a confusion that I thought I would just go ahead and share. But that is the form itself. And now we've got about 10 minutes left. So I don't know if people have any more questions or want to, clarify anything about what you've seen, but the floor is yours now. If anyone does have any of those questions. All right, here we go. Elliot says, are there any standards for how assessors determine cap rate? That's a really great question. Hold on one second. Let me pull up the bill language. This was something that had come up a lot because to get everyone kind of on the same page, some assessors were doing everything correctly except in calculating the cap rate. They were incorporating market rate data and not comparable properties that are affordable. While we've incorporated that into the training for assessors and made that really clear with a language that talks about in subsection E that we included information clarifying that it should be compared. Yes, and capitalization rate data from comparable affordable housing. We added language in there to explicitly say that the capitalization rate data should be from comparable affordable housing. So that should be a part of this. But I will say that as a piece that it could be an area of maybe some continued mistakes, but knowing that that is explicitly required in the new code, that could arm you with that information to push back and say, could you explain how you got this capitalization rate? According to Virginia code, you are supposed to use data from comparable affordable housing for that. And again, that'll be incorporated in the training, so hopefully that won't be an issue, but at least that is now added and clarified in the code. So I'm glad you asked that because I forgot to mention that. Does anyone have any other questions? I know this is a lot of information. It was me just kind of talking at you.
So, Isabel, this is Jason from SupportWorks. We talked a little bit about this, but so from a timeline standpoint, we should just go ahead and submit these things. We're not necessarily trying to snap this to the appeals timeline. We could just go ahead and
Yes,
get these in
yes,
January.
absolutely. Most assessors say that they do at the beginning of the assessor process send out a request to all all property owners to send them data. I don't know exactly if that gets to everyone to the appropriate context, if everyone sees that request, how that's done differently based on locality and how the assessor does stuff, but most of them say they do at least put out an appeal for data information. So you could, if you know when that's coming, respond to that with this, but you can also be proactive and just go ahead and fill this out and send this to your assessor and say, when this assessment, season or process starts, we're an affordable property and here's the information you need to do the income approach according to state code. I encourage everyone to be as proactive as possible. So I'm glad you asked that. Again, I know that the timing for when assessment periods happen differs based on where you are and stuff, but we encourage everyone to be as proactive as possible. Any other questions? Someone said the vacant units count for the reporting period sounds vague. If you think that there needs to be further detail, if there are only vacant units for like a certain amount of months and there's not room to provide that detail, I encourage you to attach something and put that in there. It was really hard to have a balance in this form for letting room for additional detail, but making it clear that not all the detail is always required. So if it feels vague for you, and I would again, it's really important that they know the actual vacancy rate and for how long, because that really impacts what your gross potential income is, and that can make it more accurate. So you have the incentive to provide as accurate and as detailed information as you would like. But we tried to strike the balance of if it's not always needed, we don't want to require that. So, for specifically for that question, I encourage you to be as specific as you all need to ensure that you get the most accurate. So someone asked, at what point should this form be submitted? For example, a property undergoing substantial rehabilitation, could this be submitted during construction with projected income expenses or once complete? So I'm glad you asked this question because it is a little bit confusing. In general, this code applies to all affordable housing, and the specific piece that we've added here with HB 2245 relates to a property that is generating income. So while property that is under construction and is not currently generating income, that is still could be assessed according to kind of just the general kind of loosey-goosey of existing code or how other practices are. And understandably so, that is a little bit more of a unique situation. This specifically, these things that I discussed today and this form is related to property that is currently generating income. If it's still generating income while it's under rehabilitation, that still counts. But I just clarify that if it's purely under development and it's not open yet, and no one is renting yet, this does not apply, or the specific provisions that I've talked about that are additional after this bill do not apply. It is specifically related to property that is generating income. And getting into a whole complicated issue of projected income is a different issue. And that's something that we were not able to address in this effort. But we can continue to have those conversations if a solution is needed and what that could look like. But for now, this applies to property that is generating income. But I will say that just in general, it doesn't hurt to send this information if you think it should be considered. So if you think that that's important while this property is under rehabilitation, that you can share this and have that projected income and that could impact the assessment, go ahead. I just say that specifically the words saying that this requires the income approach apply to properties generating income. Does that make sense? Great, cool. Well, we're at 1 o'clock, so I understand if folks need to go. If anyone does have any further questions, I can stay on a little bit longer. What I didn't get to was just that we do have a bill that we're working on for next session too, that's not related to assessments and values, but trying to give localities more options when it comes to property tax abatements, if they choose to do it, to do a technical fix so that they could potentially include affordable housing owned by a nonprofit, since they already have the ability to do that for property owned by a nonprofit. But of course, as you all know, the ownership structure of affordable housing is not really straightforward. And so we're proposing a technical fix that would consider affordable housing owned by a nonprofit, incorporating kind of that complex understanding of that structure to still count. So exciting update, but I wanted to make sure that we at least communicated this bill and what this impact has. So thank you all so much for coming. We'll follow up with the recording and the slides, and I'll stay on if people have more questions.